I think this is entirely in keeping with what Donald Trump and Elon Musk want to see us do, and that is...
Paul Atkins is often labeled a libertarian, but what's more important is that he's a strong advocate for crypto. He's not just another voice in the space. He's actively pushing for the success of digital assets in America. Atkins has spoken at major crypto events, including a Cardano conference, and his stance is clear. He wants a thriving, well-regulated crypto industry. Now, his confirmation is looking likely, but there's a last-minute pushback from the usual suspects, those in Gary Gensler's camp. They're claiming Atkins isn't fit for the role. Ironically, these are the same people who backed Gensler, despite his controversial handling of crypto regulations. And leading this charge? Senator Elizabeth Warren. She's rallying against Atkins, trying to sway opinions against his confirmation. But here's the thing. Her arguments don't hold up. Let's break down what she's saying and why it doesn't add up.
I think this is entirely in keeping with what Donald Trump and Elon Musk want to see us do, and that is loosen regulations, loosen regulations, loosen regulations. That is what Paul Atkins did. He also said repeatedly that no, regulations just get in the way. Everybody needs to do whatever they want, those big Wall Street giants. We saw the crash in 2008, and here's what happens next. After the crash, he has the chance to have a little 20/20 hindsight. He has 20/0 hindsight. He looks back and says, nope, no problem with having let those giant Wall Street banks run wild. And the fact that the American taxpayer had to bail them out, not a problem. That's my concern. If someone has demonstrated such poor judgment, you got to be really worried about putting them in a job. And here's the thing about Paul Atkins. We have both his demonstrated experience, but also look at his experience overall. He says, well, I'm going to divest this interest, but he doesn't want to tell us who he's divesting to, who's buying it, and for what purposes, and what are the long-term plans.
Warren's biggest criticism? She claims Atkins wants excessively loose regulations, making him a dangerous choice. But let's be real. Her real issue is that Atkins has deep ties to the crypto space. She sees his industry experience as a problem rather than an asset. Now, here's where it gets interesting. An analyst who's been in the crypto trenches had the perfect response to Warren's concerns. She breaks down exactly why Atkins is the right choice and why Warren's fear-mongering doesn't hold weight. Watch this 2-minute clip closely. It's a masterclass in dismantling anti-crypto narratives, and it perfectly explains why Paul Atkins is the right person for the job.
Let's just get more context to the crypto regulatory environment right now. What it looks like under the new Trump administration. I'm joined now by August co-CEO and co-founder Aya Kantarovich. August provides a platform to manage and trade digital assets securely. And the looser perspective, too loose, or actually are you thinking we will get a balance here that helps serve your growth, but also serve security and the protection of consumers?
Yeah, I think, very commonly people misunderstand where Paul Atkins is coming from, assuming that, we're going to go from the Gary Gensler regulation by enforcement to all of a sudden no regulation at all. And Paul Atkins is very, very strict about no market manipulation and no fraud. So we're going to see KYC, KYB. We're going to see AML requirements. And that's going to be broadly across the crypto industry. And then also clear regulation. And I think if you look at, what Senator Warren's saying, before we saw all of the American companies get pushed offshore, whereas now we're seeing an opportunity to onshore these companies, make them, founded in the United States. And that's a really big shift and a big difference. And you can do that somewhere in the middle.
She was trying to speak to, I suppose, also the way in which he's managed to make it clear that he has no skin in the game. Are those in a position of power over in the administration and in the various agencies doing enough of that, signaling enough of that, that there's transparency when it comes to crypto holdings and they're not sort of managing to benefit themselves?
Yeah, it's a great question. I mean, the same question was asked about David Sachs as well when he divested, I think it was roughly $200 million worth. And he did so at a loss. And, I think it's really important to your point. One, he, disclosed exactly what the positions are. So Atkins has 2 equity positions in Securitize and Anchorage. He has 1 position in a hedge fund called Off-Chain Capital. And he said he divested those. So, if he gets approved on Thursday this week. And so I think we are getting the transparency we need. But the bigger question here is, do we want, professional regulators who haven't been in the space, haven't had that dialogue, running the regulation for us? Or do we want people who have actually been in the trenches, who have had those conversations and dealt with those problems directly, to be running and making those decisions on our behalf?
Therefore, what you want is someone in the job who understands the asset class and then makes appropriate regulatory changes appropriate.
If you think about it, there are a couple buckets. The first is the United States, without a doubt, has been losing in the geographic regulatory space. So we have in Europe MICA, we have in Singapore MAS, and in the US we don't have anything. And so, it's not just about onshoring American companies that went offshore, but it's also how do we compete so that we can actually get companies from Europe who are under the MICA registration to come to the United States as well, and build here in the United States. The other thing too is, how do we treat clients? How do we structure our entities? A large part that hasn't been discussed for token companies specifically is all token foundations are typically under BVIs or the Caymans. And a big discussion is how do we bring that to the US? How do we create launch foundations, token foundations in the United States with clear guidelines?
And why would we want token foundations launching in the United States? Just reiterate the positive nature of this for investors or entrepreneurs who are watching this.
We're looking for transparency. We want to see exactly how these companies operate. We want to be able to go through, tax filings if we need to and audit them as well. So, it gives you the transparency everyone's asking for. But to do that, you have to onshore the company first. And in order to do that, you need the clear regulation. So I think we're definitely seeing a path forward with Atkins. It's going to be really exciting to make, New York, the United States, the crypto capital. We are for finance. It should be for crypto. And it's one step in that direction.
The crypto world is evolving fast, and we've got you covered with daily updates. So if you want to stay ahead of the curve, make sure you hit that subscribe button. Before we wrap up, I've got something incredible for you. This next clip features Michael Saylor, breaking down exactly how Bitcoin's market cap could skyrocket to $500 trillion. It's a step-by-step breakdown, and trust me, you don't want to miss this. Oh, and don't forget to smash that like button. Let's dive in.
Every single day, tens or hundreds of millions of dollars of capital are flowing into the network. It's going to go from 2 billion to 20 billion to 200 billion to 2 trillion to 20 trillion to 200 trillion. And when it gets to 200 trillion, it'll chop along at plus 20% to eventually 300, 400, 500 trillion dollars. And where is that capital going to come from? It's going to come from Russian real estate. It's going to come from Chinese private equity. It's going to come from everything in Africa, everything in South America. You have capital flowing from foreign financial and physical assets to Bitcoin. You have capital flowing from 20th century assets to Bitcoin. Capital is going to flow from the 20th century to the 21st century. It's going to flow from physical to digital. It's going to flow from currency-based derivatives to a digital commodity derivative. So it's already happening. It's unstoppable. It's literally like, for me to say Bitcoin's going to demonetize gold understates it. Yeah, it's going to demonetize gold. Then it's going to demonetize the real estate that's 10x more than gold. Then it's going to demonetize every long-term store of value. So what you have is a situation like the Europeans show up and they give like some Dutch guilders or some pieces of paper or some glass beads or seashells or stone coins to people using a more primitive form of money. And we have the opportunity to, in essence, just grab 10, 20, 25% of the network, let the entire dynamic flow, and it's going to accelerate. And when the dust settles, the American people will own 25, 30% of that capital, which right now is sitting in 20th century foreign assets.